Welcome everyone to today's webinar for Little Green Pharma ASX code LGP. Shortly I'll introduce Little Green Pharma's CEO Paul Long, who will provide an overview of the company's December quarterly results, with the company reporting $9.5 million in revenue unaudited for the quarter. A record sales month of 3.6 million in December, and the company's revenue financial year to date already surpassing last year's full year revenue. In addition, Paul will provide an update on LGP's operational activities, including the company's continued expansion into lucrative European and UK markets, and the recent acquisition of the Australian medicinal cannabis business Health House. At the conclusion of the presentation, Paul will also be on hand to answer any questions you may have, which may be submitted at any time using the Q&A button on the bottom of the screen. So during the presentation, think of any questions you may have and submit them, and I will put them to Paul at the end of the presentation. Right, let's get into it. Now, I would like to formally introduce Little Green Pharma CEO Paul Long, who will run you through the formal presentation. Paul, over to you.
Thank you, David, and welcome to everyone, and thank you for joining today's presentation. David, we'll jump to slide 3, please, and kick straight off. That's the one. So for those that are familiar with this slide, it's a really good snapshot of the company and what we're currently doing across the globe. The changes that you would have seen from our last quarter to this quarter, we've added a number of things. So another brand to the portfolio, which we'll talk about later on in this presentation, Lush Labs. We've got a number of new products as a result of that new brand. And obviously we've got a new facility inside after the acquisition of Health House just recently, and we'll talk a little bit more about that as well. But importantly, one of the things that we will mention is the increase in our production out of our Danish site as well, on the back of some really solid growth. So 30-ton capacity in our Danish site, but we're ramping into that now. We're now up to about 7-ton capacity. So that's been a really exciting proposition at the start of this year for us. Thanks, Dave. And so we'll first start with a bit of a snapshot of where we're seeing the opportunity and the market update for us. And I think, you know, it's really important to touch on the German market. What we saw in the data since the regulatory changes last year. So the changes came in June last year, and we saw that the data that we actually capture from the BfArM, which is the regulator in Germany, is about 3 to 6 months delayed. But what we saw in that first quarter was a huge jump in imports. So we saw 20-ton imported into Germany across the board, of course, 20-ton imported into Germany in that first quarter. So that was a massive increase, in fact, a 3 to 4 times increase on the quarter before. We have seen that continued growth and huge demand on imported product into the German market. So that's really had a solid positive impact for us. And obviously we have our Danish site capable of producing 30-ton, just a 2-hour drive from the German border. So in December alone for us, so December 2024, we had $1 million worth of sales into the German market just in that one month, and we've got a really strong pipeline of purchase orders, which we'll talk about in this slide, both into Germany and into the UK market. Thanks, Dave. And so touching on the UK as well, we have seen a really interesting growth there as well. In fact, the market, we've seen the market actually triple in over between 2022 and September in 2023. We saw a significant increase in the volume demand, and we continue to see that growth now in the UK, off a much lower base than Germany, of course. But we're obviously seeing some really positive trends inside that market. And for us, we've got a number of repeat customers that we're delivering product into that UK market. And one of the interesting stats that we've got on the slide there is the consumption. So the average person in the UK is consuming 144% more than the average German patient. So the potential size of that opportunity as that continues to grow off its low base is exciting. And if we look at the potential opportunity of that market, we believe that it could be a real sizable market. So it's been a real focus for ours. The UK and Germany have been our two high growth focuses now for a number of years. We did see in the last quarter some regulatory changes. So when in any rapid growth market, you often see the regulator catching up on some of the processes and systems. And so there was some delays for us and other products going into that market around labeling primarily, but minor changes. And it's not something we expect to see any inhibition to growth in the coming quarters and years ahead. Thanks, Dave. The other two key markets that I'd like to mention in this presentation is the French market. For those that have followed us for a period of time know that we've been actively participating in a trial in France, which has gone to a post-pilot transition over the last few years. We are moving closer now towards a regulated medical market in France. It's worth noting the size of the French market, 68 million people. Little Green Pharma is only one of two delivering into that post-transition phase. And we expect later this year to transition into more of a medical framework. And the good news on that framework is that it will be built around a dossier-driven and marketing authorization-driven market, which sets us up perfectly to be the number one brand in that market. So whilst there's two, we're still the number one in the trial, and we believe that we're incredibly well positioned to capture the lion's share of that market when that begins to open up. And we do think, having now had quite a bit of experience in particular the European market, we're prepared and ready for that curve of growth, and we can see some really good opportunity to play a key role inside that market. And Spain was the other one really worth mentioning. I think it's an interesting one, a country in which we actually hold a small percentage in a cannabis company in Spain and have for a long period of time. And in fact, we've got a board member based in Spain as well. But there's been some recent changes, and the Spanish government has actually announced that they're looking to approve a decree by mid this year, 2025, and then within 3 or 4 months, we expect there to be a transition into a framework not too dissimilar to some of those heavily regulated markets that we like. So there'll be sort of a standardized process. There'll be dossier-driven submissions. It will be quite limited to begin with. So we're hearing that perhaps there won't be flower inside that market. But again, for us, being a very medically driven, focused supply pathway into the European market, it gives us an early opportunity to position our brand. So we're pretty excited about late 2025 and early 2026 for Spain. And again, you just look at the size of that market, and we're talking, I think it's 48 million people in Spain. So a significant opportunity when that market begins to open. And I guess what we've seen now in our experience is we've seen the Australian market, the slow growth, and then the rapid transition into volume. And now again, we've seen that in the German market as the regulatory pathways and barriers have been dropped. So yeah, we certainly think that work that we've done in the last few years in positioning ourselves in these countries will pay off in the future. And also that big site that we've got, obviously the largest site in Europe. It was a big decision for us to make that acquisition a number of years ago, but we think it's positioned us really well into the European market. Thanks, Dave. And so touching on the site that you can see an image there of one of the grow rooms, but one of those big lines of grow rooms, that is each of those rows represents a new grow room. So we have actually, on the back of the demand that we've seen, we've just made a decision to roll into a new grow room, and that will give us another 2-ton capacity. So that brings our total tonnage that we're producing out of there once that room comes online in the coming months, up to about a 7-ton capacity out of that site. And as mentioned up front in the presentation, we've got up to 30-ton we can be producing out of that site. So we've got lots of growth opportunity to expand. Obviously, there's a bit of a working capital draw on expanding into a new room with a need for some work around some lighting and some other things. But we think that that's going to give us a positive return in the coming quarters. And as I noted, the Danish facility is the largest facility inside the European Union. And for those that haven't heard it before, the previous company that built this site and fitted out this site spent over 120 million Australian dollars on that site, and we own that site debt free, having previously paid 20 million Canadian for that site. So yeah, very, very well positioned. And in really good news for those that watch our releases would have seen that there were some changes last year from the Danish government to improve the pathway to utilize Denmark as more of a hub for us. So inside that, we'll be able to, in the future, look at importing, storing, and a bit of a processing hub for Europe. And we've got huge capacity there. So on the manufacturing and GMP side, we've got a huge amount of space that we can utilize. And so there's some exciting opportunities we're working on in that space. Thanks, Dave. This slide is one that I'm sure many of you have been familiar with before, but it shows that the numbers represent the markets which we actually entered into in Europe in order. And you can obviously see the Danish site sitting there just above the German border, really at the moment, servicing a lot of the German market, the UK market, and still delivering quite a big volume down into the Australian market for us as well. But the interesting thing about what's happening in Europe is I think we can sit here now and say, I know that we can sit here now and say the market is here to stay. This is a market that will grow, and there will be certain countries that come online at a certain time, but we know that growth pathway, and it will be slightly different country by country. But we're incredibly well positioned. We've got the lion's share of our team now based up in Europe, and certainly a big focus on where we see a lot of the growth. But if we look at the total addressable market on that slide, into the markets we're currently selling into, it's more than 1 billion patients inside that total addressable market in the countries we're currently selling into. And if we step out more broadly into Europe, it's more like 2.5 billion. So we still believe that we're really early on that curve and opportunity into the European market, and very well positioned at a brand level. Thanks, Dave. So on the quarter for revenue and cash receipts, I think what you can see on this slide, and it's only looking at 5 quarters, but you can see a positive trend, which has been really encouraging, particularly if you sort of look across perhaps some of the more Australian focused companies. There's been some increased competition inside the Australian market. So we've seen this real positive trend now over quarter on quarter on quarter. And one of the positive things here, we see a bit of a step change in our cash receipts, with both the last 2 quarters above 10 million. Obviously, we have had a slight drop off in this most recent quarter, but I'll talk you through a few of those on the coming slides. Thanks, Dave. So this slide's looking at our revenue per product category. And so what we saw in the flower category is a small drop in our flower sales, and that was mainly driven by the demand really outstripping the supply for our Cherryco Smalls range, which is one of the brands that we launched last year. And we also had experienced some slight delays in some product into Germany on the flower side, and the same on the oil side into the French market. So more of a timing issue really for those regulatory issues, nothing that will impact on quarter by quarter. And we did see a bit of a drop off on the oil sales into the Australian market again, so the timing of a delivery of a product with some slight regulatory delays into the French market. We did, however, see an increase in our vaporizer sales, albeit off a slightly lower base as well. And I think if we look at that bottom slide there and look at our annualized revenue by category, I think the important thing to note is that our financial year goes through till March. And so we're getting pretty confident of a strong growth year-on-year position, which is we're really proud of. And certainly that focus on market segmentation, we think, has begun to pay dividends, and we will continue down that path this year and into the next, around ensuring that we're looking through the lens of the market segmentation to ensure that we can continue to drive top line and bottom line growth. Thanks, Dave. So if we look at revenue by segment, primarily by Australia and Europe, we break up these slides. We can see that we did have an increase in sales into the European segment. So you can see that light blue section on the top of the top graph on the right-hand side. And so that was largely driven by 20% growth into the flower sales into primarily Germany and the UK. Interestingly, what we saw in that last quarter is a really big volume delivered into Germany in just December. So we had $1 million of revenue into just that 1 month. And looking forward, we've got $6 million of confirmed and firm purchase orders, which are binding into both Germany and the UK between now and June. So we expect that that light blue section of that graph to be significantly growing in the coming quarters, which is really exciting. And the Australian market was, as I mentioned, sort of slightly down, but largely driven by that supply-demand issue around the Cherry-Co smalls. So we've got plans to reverse that in the existing and future quarters, and certainly across that regulatory pathway and delivery into markets to ensure that we get the timing right on those. But all in all, we're really excited about that growth. Thanks, Dave. Across the brands, we spoke about the segmentation. So this slide has also been one that we've actively spoken about before, but we can see there that the decision to look at multiple brands and segment the market. The Australian market is now well established. We do believe that whilst we sit within the framework of the medical pathway, there are segments of the market that are looking for certain connection to brands. So when we launched Cherry-Co over a year ago now, that was certainly a market that we saw an opportunity to target a lower cost, higher volume product. And so whilst we've had a bit of an issue in keeping up with the demand of that particular segment of the market, we've certainly seen a really positive response to that. And more recently, we'll talk about it, I think, on the next slide. We'll talk about the launch, or a few slides down, the launch of our new craft brand in Lush Labs. Thanks, Dave. We'll quickly touch on this slide, but our net cash flows from operations is displayed there over a long-term graph, and what you can see there is really the top line revenue growth over a long, consistent period of time. And I think the important thing to note, whilst we can see the operating net costs increasing, it's important to note that a lot of those costs are directly linked to the growth of revenue as well. So we certainly see an example of a distribution fees, for example, which is a percentage of the total sales. We'll continue to see those increase as we see our top line revenue increasing. Obviously, the acquisition of Health House gives us an interesting opportunity to bring in and take on some of those savings in the supply chain as well. Thanks, Dave. This slide really highlights a couple of key areas, but one that we've spoken about many times is our net tangible asset position that we can see there. Really, really strong. Obviously, that position is backed in large by property and assets and equipment that we own, but obviously the site up in Denmark, we own not only the property, the land, the buildings, the infrastructure. There's a farm next door. There's 2 houses that we all own debt-free up in Denmark. So, the company is unique in our industry in that it is underpinned by these hard assets and a strong net tangible asset position, and minimal long-term debt. So we really look at this slide and our view is that the valuation metrics, looking at a market cap of around about the 40 million, gives us what we believe is a undervalued position, but a really good opportunity as we continue to grow and as we see those sort of global tailwinds begin to impact on the industry, hopefully this year. Thanks, Dave. I've spoken about some of the new brands here. We can even within the existing brand strategy, we're always looking at options within the market or segments within the market to look at bringing new products. Our supply chain, having been now 8 years in the industry, our supply chain, both direct and through third parties, is now really well established, and our processes to bring in new brands has been streamlined to really look at opportunity in the market. Across the board, if we look at the numbers across the board, we think we're in the top 3 brand positions here in Australia, and in some of those European markets, similar position as well. So, but one of the really exciting things that we've been working on for the back half of 2024 was into 2025 was really a focus on the craft end, and so we launched Lush Labs. In fact, Dave, I'll get you to jump to the next slide, please, mate. We launched Lush Labs, which was our craft brand, and that is an end of the market where the patients are really looking for a different part of the market. So they're looking for product that is unique in its strain, it's unique in its terpene profile, it's unique in color, it's hand trimmed, and so we partnered up with a group out of Canada that and a grower that has 40 years history in growing really unique strains. So we've got an exclusive pathway for these strains to be entering into the Australian market under the Lush Labs brand. So we've seen a really positive response just in the first few months of launching those products into the market. And it just positions us really well to not only partner with some of the top producers in the world, but also over time, we believe our Busselton facility here in Western Australia will be really well set up to be one of the first and one of the best craft producers inside the Australian market. Thanks, Dave. And so the Health House acquisition news was obviously really hot off the press ahead of today's presentation, one in which that we'd had a dialogue with Health House for a number of years, but one that we saw real opportunity given the state and the position of the mothership being Melodial and the issues that they have had. So we've had a long working relationship with Health House as a wholesaler. They're a legacy brand inside the Australian market that were one of the first to actually become the wholesaler for the medicinal cannabis industry 7 to 8 years ago, and we've been working closely with them over a long period of time. So the team, the culture, everything about Health House we know very well, which is a big assistance and help with any acquisition. But look, for us, really status quo. We took the keys and they're now working inside that vertical integration pathway that we've spoken about over a number of years. And we see some really good opportunity, but most importantly, we believe for shareholders, the acquisition value was one that made a lot of sense for us when we went through our due diligence. So yeah, we're pretty excited, but as I said, it's really integration process now, and status quo will continue to work with Health House and a number of other wholesale brands in the market. So, but certainly, one in which we've been talking to the market for a long period of time around opportunities for acquisitions. We believe that there is a consolidation period happening. We believe that there's shakeout happening and a number of companies not sort of making it through this existing environment. So for us, we think there's going to be some really good opportunity. We saw Health House. We've certainly looked at opportunity in other parts of the supply chain as well, and we'll continue to do that moving forward. Thanks, Dave. And a short update on Reset. You'll see in the photos there, we're now have our Shenton Park clinic almost ready to go, so fitted out and ready to go. So we've made some really good progress there. And then on the clinical trial front, we've finalised the clinical trial with patients now just receiving a follow-up, and we're now just waiting on an update on the results imminently, actually. So some really good progress there on Reset and the clinic here in Western Australia. As you can see, they're ready to move forward and looking forward to bringing our first patients through there in the coming quarters. Thanks, Dave. And last slide there to touch on is really just our corporate overview. But for those that are unaware, that Thorney took a larger stake, having purchased a big chunk of Hancock Prospecting shares recently. So yeah, that was good news for us. And Thorney have been a real long-term supporter of Little Green Pharma and really proactively supporting us inside the market. So they hold a 19.8% position in the market. And we continue to hold a really strong position at a board level, so with the board holding 12%. And that means, as always, that the board and the executive are very well aligned to the return for shareholders, and the strategy that we're implementing is aligned to the shareholder base as well. Thanks, Dave. I think that might... Oh, there's just one summary page there. Yeah, thank you. So look, I think the one thing for us that we've really... we look at this market now in Australia. We see the highly competitive market. We believe we've made decisions over a long period of time around pushing hard into the European market. If we reverse back out a number of years ago, and the decision to look at our pathway into Europe was one that we sit here today, and with the growth that we see in the German and the UK market, is starting to pay dividends. So one of the biggest things is to actually see locked in purchase order numbers of $6 million into those markets between now and June. That's really for us like a bankable pathway now, and to have that site debt free up in Europe, we really do believe we're in a super strong position. And then we've got these new emerging markets that our strategy focuses on, the France and Spain's and the Danish markets, that the Polish markets, that will take more time, but they are big markets, and they will continue to trend in the direction that we've seen in some of those early moving markets. So look, we believe we are delivering on strategy. We believe looking ahead, we've got some really exciting news to be talking to the market about as we continue to grow, when we continue to look at new opportunity, and we continue to look at the Australian market as a big growth market for us through that lens of segmentation and opportunity through the shakeout that we expect inside the Australian market. So that's the summary, and thanks again for everyone for your time today and tuning in. And I think David hopefully has got a few questions.
Thanks, Paul. Great presentation. Having watched and worked with the company over a long period of time, clearly have advanced in a number of areas. A stack of questions, so we might just jump straight into it if that's okay. In regards to the US, obviously an established market, both medicinal and recreational. What are you seeing in the US? There seems like there's a lot coming out of that market. And what impact do you think that'll have on ASX listed cannabis stocks and the Australian cannabis industry more generally?
Yeah, so I mean, if you look at if you trend the average price across the US and the bigger cannabis companies over the last, say, 5 years, and then you overlay that with the Australian cannabis listed companies, there's a very interesting trend. It follows the same pathway. So we do believe that there will be trends that broader to the market, broader to the strategy that we're delivering, that will supply upward or downward pressure on our market at the moment. So whilst we think that tailwind could be interesting, whilst Trump came out before presidency saying that he supported federal legalization, there's certainly been a bit of a he's obviously been in office now for a few weeks, so we haven't actively heard too much of a dialogue. But Kennedy coming into that health portfolio is seen as a positive. He's very positive on alternative therapies. So we do take the view that there will be progress at a US level at some stage. Obviously, we're not in the political game and not really across the detail of that market. But when that does happen, we expect there to be a real tailwind for the industry. So if you look at the multi-state operators in the US, the Veranos and those companies, they did actually have quite a big drop off after Trump came into administration. But if you talk to the advisors inside that market, they're expecting a big uplift on those groups once there is a regulatory change inside that market. But interestingly, and it may have been off the back of some of the international export markets, we saw a big uplift in a few of the Canadian LPs in the last couple of weeks as well. In fact, I think Aurora might have been up 40 or 50% on the back of their quarterly news around their export market, again, largely driven by the German exports as well. And so we think that there's a bit of a broader global view on valuations that will have we think a positive trend once we start to see some change in the US and the Canadian markets.
And talking about competition, there's a question here around clearly a competitive space. You've been able to secure a lot of contracts, significant contracts across multiple markets. From a financial point of view and an operational point of view, what is the competitive advantage you think you have?
So I think brand. Well, if we segment that market a little bit, if we look at the Australian position, I think the competitive advantage is certainly brand. Having got first mover or early mover into the Australian market, first to produce a product in Australia. At the end of the day, this is a medicine that relies on a doctor writing a script for, absolutely. And so having built a trusted brand inside this market has been critical for us to establish the position we have. But obviously, the market has evolved into hundreds of suppliers in this market. So we've really had to sit back and say, how do we look at this market? How do we segment this market? How do we look at different brands? How do we look at different opportunities through that supply chain? If we look into the European market, obviously it was a big, there was risk involved in that acquisition of the Danish site when we purchased it now almost 3 years ago. But I think at the time, it just made sense for us, given what had been invested there, given our focus on that European market. And we certainly feel the validation of that at the moment as we sit here today. And we're seeing, that increased demand. I think even just those $6 million worth of POs connected into the German and UK market certainly shows us that, the opportunity to continue to grow that site and try to push it up to its capacity of 30 tonne is something that we believe now is really possible. For us, quality is key. We're producing in Denmark. Certainly there is a slightly higher cost base, but what we've been able to show is as we increase volume, our cost per gram comes down. So we believe we're comparative now to the Canadians. They're all indoor growers. So I think on a cost per gram, we think we can be competitive. On a quality, stability, close to the market, all of those are advantages to us. And the reality is there won't be another company, certainly as far as I can see in the next decade, that will spend another $120 million on a site in Europe. So in many ways, that's a very, very unique site. So, and we're just starting to see a bit of a swing and a trend towards power back into the cultivators as well, with that big oversupply we saw probably in 2023, 2024 out of the Canadian market starting to sort of lighten off a bit in the market as well. So that again positions us really strong into the current market.
Probably a statement more than a question from a shareholder that clearly has ridden the journey. You were bruised and battered a bit when that facility was acquired, and people thought you were buying or biting off a lot more than you could chew. How pleased are you as the company and the board that you rode that storm? Because at the time it was a big bite, it cost a lot of money, and there was a lot of debt that came with it. But where you sit now, I know you've said it was a decision that you now feel has been validated or vindicated. But how much nerve did you have to stay the course once that was acquired?
Yeah, good question. Look, I think certainly that decision had its doubters, but the fundamentals of the due diligence we did on that deal made a lot of sense for us. It wasn't a shooting from the hip decision on that opportunity. We knew there was a long game here and an opportunity. And to be honest, when I say we feel validated with the acquisition of that site, that is still a process in motion. So, in 3, 6, 12 months time, we have a pretty clear pathway for what we can deliver from that site. What we do know now is that site is producing at a really competitive cost per gram. It's producing decent quality product, and demand is high into that market. And we've just gone into another room at 2 ton, and we hope to continue to do that as we move forward. So I think that the validation piece will be more and more as we continue to grow. And it's been a really good lesson for us on, making an acquisition just through COVID, where we couldn't even visit the site, and we've had to integrate a site in a different culture and language. It's been hard work, but it certainly taught us a lot as a business on how we do integrate that and bring those types of companies into the Little Green Pharma family. So yeah, at this stage we're really positive, and we see a really exciting opportunity, and just underpinning the business with something that we don't have any debt on is one thing in itself. It positions us very differently from our peers in this market.
Now, you mentioned you believe global cannabis markets are in a shakeout period, and that this is a good time to look at consolidation. Are you guys looking at acquisition opportunities outside of Australia? Obviously, bedded down a business as usual health house acquisition several years ago, picking up the facility. Do you keep the eyes up, and what sort of opportunities are you looking for?
Yeah, absolutely. I mean, absolutely. And look, it's a fine balance really on how we manage acquisition opportunities, because I think in this market there's a real shakeout happening. There'd be opportunities sort of come across our desk every couple of weeks, and so we need to be really selective on where we spend our time, and we really need to be focused on a company on implementing our strategy, which is really clear around our growth strategy. So we try to spend the lion's share of our focus operationally, but we do know the type of opportunities that we are looking for out there in the market. And we have kicked the tires on quite a few now, both in Australia and up in Europe. Health House being the first one that really connected and made sense through due diligence for us, and we think we'll continue to do that. But it is really important for shareholders to know that the focus for us is implementing our strategy, which will continue to drive growth for the business and long-term shareholder return.
Just touching on Health House, you've mentioned it's a business as usual acquisition, fits neatly in and offers that vertical integration. What does Health House bring to Little Green Pharma, and potentially what does Little Green Pharma bring to Health House?
Obviously, Health House have been a group that we, as I mentioned, we've worked with at a wholesale level. So We are fairly, say agnostic, but we work with a number of wholesalers in the Australian market, and that is largely driven by a lot of the wholesalers have their own demand pathways through clinics and pharmacies. So it's important to us that we have partnerships across the board. Health House are a West Australian focused business as well, so they service a lot of the pharmacies over here on the West Coast. They do have a number, I think it's a couple of thousand pharmacies that they've got accounts with, or maybe it's slightly shy of 2,000, but a huge number of pharmacies that they have relationships with and accounts with. So there's some pretty significant opportunity for us there. I think one of the obvious things that the alignment will now bring is that wholesale margin that we were currently paying to Health House begins, we bring that in now in-house. But as I said, for us, it's really important for us to be continuing to work with a number of partners across the country, and and for us, even just the simple part of for us, they've got an asset here in Western Australia that is capable of storing and wholesaling directly. So that made a lot of sense for us, particularly given the price that we announced that we paid for that, and the value that we think that brings into our pathway.
A question here in regards, I won't go into the specifics because it's more of a consumer question, so I won't touch on that. But is moving forward edibles part of the potential product mix?
Simple answer is yes. Watch this space.
Okay. Nothing like leaving people with a bit of suspension. You also touched on that one of the takeaways from the December quarterly is that Germany and the UK seem to be growing rapidly. Just touching again, what's the background of this and how is LGP positioned?
Sorry, mate, can you repeat that one for me?
Sorry, it just touched on Germany and the UK seem to be growing rapidly. What's the background for that growth and the positioning of LGP in those markets?
Yeah, so the German growth has been driven by that regulatory change in June 2024, when the government decided to no longer schedule THC as a narcotic. So it was a step change towards an open regulated market, but the framework continued to be medical in that it needed to be a GMP pathway product, which we produce, and it needed to be a doctor script. But what it meant by THC no longer being treated as a narcotic, it could essentially be delivered by Uber Eats. You need to go to your doctor, but you deliver it by Uber Eats. And this regulatory change is where we saw that huge step change in volume. So I think I mentioned before, in that first quarter after that change, there was a 20-ton import of product into Germany. So that's clear. That's been driven by that regulatory change. There's phase 1 and phase 2. So phase 1 is what we've spoken about. There's a phase 2 implementation happening at the moment, and we think that will also drive more demand into that market in the coming probably 6 to 12 months. The UK market's a bit different. That's just been actually a gradual build. I think we were one of the third or fourth companies to deliver product 5 or 6 years ago. And whilst there hasn't been a big step change like we saw in Germany, or whilst there hasn't been a step change like we saw in Australia with the transition from specialists to GPs, it's just been a gradual build. So we've been actively connected to that market for a long period of time now. So that gradual build is now getting to that sort of that point in which it's starting to look like some really decent volume. It's still a long way off what we're seeing in the Aussie and German market, but a really interesting market and opportunity for us.
Loving very direct answers, because I've got a very direct question. What about the Italian market? Is that a market that is being pursued?
We've certainly had a bit of a play inside that market. To begin with, that market was driven around tenders that were run by the military in Italy. So we were one of only a few. I think there's only been 3 companies ever awarded one of those tenders, and we were one of those groups a number of years ago. So we have a very strong brand position in that market. We didn't win the most recent tender, which was probably 6 to 9 months ago, but we'll continue to look at the Italian market. We do believe there'll be a trend and transition into other regulatory pathways into that market as well. So yeah, we're certainly actively looking at that market, along with a number of other markets inside the European Union.
Question here about regulation in the Australian market. Looks like, and the question implies that regulators are clearly looking more closely at the Australian market. Do you have a concern or a view on whether that's going to limit or curtail access to medicinal cannabis, the way that regulators are taking a more active interest in the way that medicinal cannabis is dispensed?
That's a good question. Firstly, we applaud it. We support it. The number of bad actors out there in the Australian market that are doing things the wrong way is significant. So we're certainly proactive in supporting those types of hardline views from the regulator. Could it have a short-term impact on the supply pathway? It is potential, but we also think what it will do is really streamline the number of suppliers in that market as well. I think the access to capital in this market is limited, and if the regulator really does their job and keeps a tight rein on how we're all supposed to operate in this part of the world, then we think that'll drop out quite a few that are blatantly sort of not following the rules. So yeah, for us, we don't see a huge negative impact. Perhaps there could be a bit of a gunshot reaction to some of the supply chain, and there's certainly some noise out there around the Queensland government, but for us, the long-term view is ultimately positive, and we think that, as I said, we're really happy with that type of news out there in the market.
How hard have you had to work on the balance sheet over the last few years, and what does the current balance sheet enable Little Green Pharma to do?
Super hard is the answer. I think we're cognizant that there's not really a huge amount of capital out there in this market, and so for us, it's been a laser focus on that cash flow break even, but balancing that off with growth. We as shareholders and our shareholders want to see top line growth, market share growth, but limited increase in our cost base. So I think actually, if you look at one of those slides where we showed our growth over a number of years. I think we've done a pretty good job in managing our cost base and continuing to see top line growth. And so that nothing really changes on that. I think that is still the focus, the absolute focus on managing our cost base and very carefully looking to increase that where it gives us a direct return to our top line is critical. And I think the best example of that would be the decision to go into another room up in Denmark with an extra 2 ton. That is a process that we modelled out, really thought through over a long period of time to make that decision. Given the bit of a lag that you see on extending into that room, and a drag on some costs was not something that we could just turn on overnight. Something that we wanted to be really careful with our cash flow.
Well, thanks for the presentation and participating in the Q&A. That does take us to the end of the questions. So appreciate you taking the time, not just to present, but also to advance and listen and provide answers to the questions that have been submitted. A number have come through. Any extras that do come through, we'll deal with offline. But thank you everyone for your time to tune in today, to listen to the presentation, and to Paul for your presentation. And as I said, participating in the Q&A. Contact details for the company are on the screen, and should you like to follow up with Paul directly, please do so. Have a great day, and as I said, if we've missed any questions that are coming through late, we will deal with them offline. Thanks everybody, and have a great day.
Thanks everyone. Thanks, David.